Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglika. Let's take a look at the stories for the day. Doug McMillon, the chief executive officer of the biggest retail company of the world, Walmart, was in India recently. In a conversation with Business Standard then, he indicated that the retail giant's aspiration for multi-brand retail might be a thing of the past. So what then is Walmart's future Indian strategy? Debar Sanyal has the answer.
What really excites us are Flipkart and PhonePe, and that's our focus. This is what Walmart Chief Executive Doug McMillon had to say when asked if Walmart still has the aspiration to be a multi-brand retail player in India. McMillon also met Prime Minister Narendra Modi recently and discussed issues such as strengthening logistics, skill development, and supply chains to make India a global export leader in toys, seafood, and other goods. Walmart struck the most expensive e-commerce deal in history to break into the Indian market in 2018, paying $16 billion for a 77% stake in Flipkart, an online retailer founded by former Amazon employees in the world's most populous country. Flipkart's valuation swelled to $38 billion in 2021 after it raised another $4.8 billion in equity. Flipkart's market share was 48% in 2022 and Amazon was 26% during the same period, according to research firm Redseer Strategy. The figures also suggest Flipkart has been growing faster than Amazon in India. Redseer calculates Flipkart's gross sales went up 40% year-on-year in 2021 and 23% in 2022. The comparable figures for Amazon were 26% and 10%, it said. In his recent trip to India, McMillon had also declared that PhonePe is set to opt for an India listing too. Walmart owns 77% share in the company. At a $12 billion valuation, the Indian payment service provider PhonePe is India's highest valued unlisted fintech startup. It finished moving its headquarters to India from Singapore recently in November 2022. But before acquisition of Flipkart in 2018, Walmart had to face challenges trying to replicate its global successes in the Indian market. Ambiguous regulations and corporate rivalry, the exit of its India CEO Raj Jain in 2013, and the dissolution of its cash and carry joint venture with Bharti Enterprises. The retail giant had a rough patch in the country. Its Flipkart deal finally brought in some stability to its India prospects. Experts believe this rocky start has hindered Walmart's connect with the Indian consumer.
They don't really have much of a customer resonance. I think Walmart, they never had the opportunity to directly talk to the consumer. Their first foray was really through a cash and carry model, which was called Easy Day, right? So Easy Day was the interface where small retailers could buy from the cash and carry Walmart Easy Day and in turn sell it to end consumers. So there was no direct interface.
In McMillon's words, Walmart is now focused on achieving $10 billion worth of exports per year from India by 2027. Currently, the figure stands at around $3 billion. He also pointed at 4 focus areas for Walmart in India: Flipkart, PhonePe, sourcing from India, and technology. So, what could the retail giant's likely India strategy be going forward?
I think since 2018, when they acquired Flipkart, so now their entire focus is how do they maximize the e-commerce opportunity to Flipkart, their largest partner, or their India partner. And they're also using India for 2 things. One is as a sourcing base for Walmart globally, and two is to power their deep technology.
In with their recent meet with our nation's leadership, the CEO, Mr. Macmillan, has emphasized on 10 billion US dollars exports from India overseas through Walmart. That is a big number. And they have committed this to achieve by 2027. They are working towards entire ecosystem, financial services, travel technology, SME empowering through Walmart. Pradhi, they are doing this SME ecosystem, and Flipkart, Samarth, they are emphasizing on this cottage type of artists and Shilpakars. They are supporting them.
And what are the major headwinds it will face and the tailwinds it will enjoy?
One of the big challenge is Walmart is a ESG inclined organization, means they are working on sustainable growth, and they believe on triple bottom line, planet, people, and then profit. Our small medium enterprises are profit focused. So to change the mindset, it takes a time. So that is challenging. Number two is the quality consciousness. And then the productivity of labor is also important. Labor rates are cheaper, but the productivity needs to come at par or better than our neighboring countries.
The single biggest challenge for Walmart in India is really regulatory headwinds. India as a market is always prone to pressure from small trader lobby, the retail trader lobby. And specifically as one gets closer to a general elections, I think they're able to put a lot of pressure on local representatives. So I think the regulatory framework is always going to be one big issue. The second big challenge, I think, for Walmart is really about the tough Indian competitive situation with a giant like Reliance and to an extent Tata's at play. Both Reliance and Tata's have kind of pan-India play on various aspects of retail, whether it is e-commerce, whether it is on-ground retail, brick and mortar, and both these are very, very fierce competitors.
Walmart's India business is centered on a clearly thought out strategy. However, experts believe it needs to think on its feet and strategize better in terms of countering the competition it may face from giants like Reliance and Tata. Most importantly, through Flipkart and PhonePe, Walmart should establish the connection between its core brand and the Indian consumer.
Like the retail giant Walmart, WhatsApp too has been eyeing the large Indian market. In a matter of few years, it has become part of daily lives of over 480 million people in India. But scammers also came along. Despite all the checks and regulations in place, an increasing number of people are falling prey to their tricks. People now are also reporting unsolicited calls from unknown international numbers. Why is it so? And what are WhatsApp and Indian regulators doing to make this platform safe? Tariq Ahmed's report has the answer.
If you thought that those with limited understanding of modern tech are more prone to lose their hard-earned money to online scammers, then you will be surprised with this piece of news which surfaced yesterday on May 15. According to a Business Standard report, a software engineer at an IT company in Gurugram allegedly lost a staggering 42 lakh rupees to scammers on WhatsApp. They tempted the techie with the promise of substantial earnings for simply liking videos on YouTube. Reports of people falling prey to scammers' text, voice notes, audio calls, and video calls have become a regular feature of news. And now there has been a spurt in people getting calls from unknown international numbers. Some of them are from Vietnam, Malaysia, Kenya, Ethiopia, and Benin. People are sharing screenshots of these international calls on social media platforms. In a recently issued statement, Meta-owned WhatsApp has asked users to block and report suspicious numbers, especially the unknown international numbers. It has also advised users to protect their accounts by controlling the privacy settings and by enabling two-step verification. According to the India monthly report of WhatsApp, 4.7 million accounts were banned from the platform in March 2023 and 1.65 million accounts were banned proactively before receiving spam reporting from the users. Artificial intelligence, or AI, is helping them in this. WhatsApp said that they are quickly ramping up the AI and machine learning system to tackle the issue, and the company has expressed optimism that the current enforcement will bring down the calling rate by 50%.
WhatsApp already has a robust functionality of blocking the number. If you are sending 10, 20, 50 messages to the unknown numbers, which do not exist in your phone book, or you are sending me a random message and I had not saved your number on my WhatsApp phone book, then it will be blocked very easily by the WhatsApp. But these scammers are recently updated their strategy. They are adopting to business numbers. WhatsApp has a facility, as we all know, a normal WhatsApp and a business number. So now they are shifting towards that business number. They are mostly calling and messaging from business numbers. So WhatsApp needs to rethink its policy on the business number also, although it has a very robust policy on the private or a personal WhatsApp. Any n number of messages you shoot from your WhatsApp number, it will be blocked immediately. So they need to put that system on the business number also.
Union Minister of State for IT, Rajiv Chandrasekhar, has said that the IT Ministry will send a notice to the company over these calls. The minister said that the onus of ensuring user safety lies with the digital platforms. The minister also wondered how these scammers are able to identify which numbers are on WhatsApp, or are they doing it blindly, or do they have some database?
Currently, government do not have any data privacy or protection law. It is pending in the parliament from several months, several years. And if the data is made secure, scammers, the supply of numbers, the supply of information to the scammers will be cut off. You cut off the supply. Na? That supply can be only cut off if the government made a strict rule or a law according to GDPR of Europe. If any sensitive data or a customer data is being exposed or being leaked by any company or anything like that, then they will be heavily penalized. This can solve the issue within a couple of months.
According to the data from the cybersecurity firm CyberX9, in India, there has been serious leakage of personal information from several sources. So, how are regulators responding to this threat?
So just labeling and saying this is happening on WhatsApp, that's wrong. There are other messaging platforms which are involved, and they have fake websites which are being set up. So if you have to look at remediating this, one, the intermediary rules which have come in, we will have to make them more effective, the new IT rules. Whereas WhatsApp has been compliant, but some of the other platforms like Telegram and Signal really need to do more in terms of taking down these groups or numbers. So if you go on WhatsApp, you can report, but what is the method Telegram or Signal are appointing to take down numbers, and this anonymity which is being used, that needs to stop. If people start making their profile anonymous and start messaging, they can literally fool anyone. The third is these fraudulent websites which are being set up. Government will have to take legal recourse to either take them down or block them. So bodies like the Computer Emergency Response Team in India will have to take measures to block these websites by telling the internet service providers, right, to block some of these websites where these websites are being set up and these are being accessed. So I think these are three measures which are there. The fourth is the I4C, the MHA I4C division will have to work with state police to go and track these cyber criminals where they are operating from.
WhatsApp international call scams are a symptom of a larger issue of cybersecurity in the country. Since WhatsApp is a widely used messaging application all over India, scammers are choosing it for their activities. But the real question is where this personal data is coming from. Studies have found out that several sites in India, including the public ones, are poorly managed and are exposing millions of people's data. The experts are convinced that there is a need for strict cybersecurity laws in India.
During his interaction with Business Standard, the Walmart CEO said that both Flipkart and PhonePe will eventually go for IPOs, and the call and the timing will be taken by independent boards. The company is waiting for that right moment. Meanwhile, according to a report, over 50 companies are expected to raise a combined 76,190 crore rupees via IPOs in FY24. But primary market activity has remained muted so far, with weaker than expected participation by retail investors this year. So what's keeping retail investors away from IPOs? And will the trend change in the days to come? Nikita Vashisht and Puneet Wadhwa explore in our next report.
Retail investors who have been at the forefront of IPO investing since 2020 seem to be missing from action this year. Of the three main board initial public offers that opened for subscription this year, retail investors' portion remained undersubscribed for two of them. Mankind Pharma's IPO, for instance, saw 92% subscription by retail investors, while Avalon Tech's retail quota was subscribed 88%. Analysts say the trend is a reflection of retail investors' cautious approach post-muted listing of a majority of public offers in calendar year 2022.
On an average in FY22, we had IPO giving roughly 25% kind of a plus return. While if you see the companies which went for IPO in FY23, a lot of them are either trading, below the listing price or are trading at the IPO price. This trend, along with the subdued market, which was both there in India as well as globally, ensured that retail investors in particular refrained from participating in the IPO market.
According to data released by Prime Database, the average listing gain fell to 10% in CY22 as against 32% in CY21 and around 44% in CY20. Moreover, the average number of applications from retail investors dropped to just 0.59 million during 2022 as against 1.42 million in 2021 and 1.27 million in 2020. Going ahead, analysts say two key triggers could revive retail investors' interest.
Post the positive listing in Mankind Pharma IPO, which was not highly oversubscribed in the HNI and retail sections, investors can look favorably at forthcoming IPOs if they are from companies that are not loss-making, are not valued too aggressively, and the secondary market remains stable. One or two more such issues could ignite the interest for IPOs among retail and HNI investors significantly.
However, there still remains a caveat.
Action in the market in FY24, and my sense is overall pace would be slow. We have hardly seen any kind of a IPO or the major listing in first quarter of FY24. With the election likely in March of 24, past trend suggests that typically preceding 2-3 months, there's not much of action in the market. That would mean that we will have a curtailed period of 6 to 7 months for FY24. And also, I guess, given the overall kind of a mood, which is kind of, I would say, more somber, one would see FY24 to be a bit kind of, let's say, okayish here.
Thus, muted returns from IPOs in 2022, along with correction in the secondary markets, has kept retail investors' participation in check thus far in 2023. But attractively priced issues delivering healthy gains should be able to revive investors' interest. On May 16, global Qs and Q4 FY23 results will guide the markets.
Go First has also been planning to raise money from the primary market since 2015, but the airline is now grounded and its owners have filed for voluntary insolvency. This has left aircraft lessors in a fix, and they too have approached NCLAT for relief. But what are aircraft lessors? Tushar Verma decodes it for you.
Aircraft lessors are also companies, but instead of running an airline of their own, they buy aircrafts from manufacturers and then lease them to airlines. So airlines across India and the world like Indigo, Ryanair, Singapore Airlines, Etihad, etc. have several aircrafts on lease. But why? Why not buy and own your own fleet? Well, one Boeing 737 MAX 7 costs $100 million. Just 10 of them would cost the airline $1 billion. An Airbus A320 costs $98 million. Such high costs push airlines to keep aircrafts on lease. One of the main advantages is that it allows airlines to operate without having to make a significant capital investment in purchasing planes outright. Instead, they can access a wide range of aircraft types and models through leasing arrangements, which can be customized to suit their specific needs. A 2021 report on airlines industry by PricewaterhouseCoopers shows that around 80% of the total commercial fleet in India is leased compared to 53% globally. In the passenger airlines category, Indigo has the highest share of aircrafts on lease. The lowest is AirAsia India as of February 2021. Aircraft lessors also provide financing and support for the purchase of new planes. They work closely with manufacturers to place orders for new aircraft, which they then lease out to airlines once they are delivered. This enables airlines to access the latest technology and equipment without having to make a large upfront investment. Some of the world's top aircraft lessors are AerCap Holdings, GE Capital Aviation Services, and Avalon. AerCap alone owns more than 1,800 aircrafts of various models and sizes. GE Capital Aviation Services own 1,500 aircrafts. This is double the number of aircrafts in the fleet of the largest airline in the world, which is American Airlines.
I will achieve, I will fly high. I am the SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Aircraft lessors, meanwhile, are worried that the Go First insolvency case may go on for several months. During this period, the aircraft will remain grounded, which they believe will lead to depreciation in their value. That's all for today. Catch the next episode of The Morning Show tomorrow. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.